Hey everyone, and thanks for joining us. We're excited to welcome Ryan Wilday, who has over 17 years experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today he melds his deep knowledge of the cryptocurrency market with Elliott Wave his theory. In August 2017, Mr. Wilday launched his cryptocurrency trading service on ElliottWaveTrader.net. Mr. Wilday, thanks for joining us.
Thank you. Hey everyone, I hope everyone's surviving the crazy weather out here. I've got a nice sunny day out here in San Francisco, yeah, I hope you guys all stay safe. Yeah, Stephen gave me a great intro, so I won't go too deep into that, but you got the stats. I would say also I called some very important turns in the Bitcoin market, starting with the top in 2017, bottom in 2018, and even the top in 2019, and all of that has been done through the Elliott Wave theory. And you can see some of that online in various places as we went along. Just a quick disclaimer. I mean, the bottom line is this is a very volatile asset class, and so I'm gonna obviously make a case for Bitcoin. I didn't intro the title, but I'm gonna show why a little bit of Bitcoin goes a long way in your portfolio. But you still need to do your own research and stay safe out there. And again, so the main point is Bitcoin has a place in any well-diversified portfolio. And I would add the second point, which is it really doesn't take much Bitcoin in a portfolio to give a lot of juice, so to speak, a lot of strength into the portfolio and in terms of capturing some amazing volatility. So why you should consider Bitcoin. I'm going to give you a few of those points. I'm going to also show you ways to engage the market as a buyer, investor, and trader. And then I'm going to give you a little bit on the price forecast. This is really not a price presentation, which I usually give, but I'll give you a little bit about what I see coming. And then just a few areas to explore if you are interested and want to go further. So why Bitcoin? So Bitcoin has matured as an accepted asset class with support from institutions. I mean, a lot of people haven't really absorbed that, internalized that. I would call it fact now, and I'll show you why I think that. The regulation with respect to Bitcoin has achieved some clarity in the United States. Again, that's to battle a myth that the regulators really are going to come down on Bitcoin. I hear that all the time, but we kind of know where they stand now. Of course, you know, we've just changed presidents and administrations, and changes of legislature can create some flexibility, but we haven't seen too much. It provides particular opportunity if the investor can capture volatility. You have to be willing to handle that, and so I'll give you highlights from the volatility of Bitcoin and for you to consider before you want to jump in. And it also gives the means to hedge cash value. It's maturing, that aspect of the market, and we'll talk about that a bit. And then it provides some safety in the event of financial system instability. I don't want to press that point too much because I don't want to be one of those perm bear folks always talking about the impending disaster of the financial system, but I'll just make a few points there. So institutional support. I mean, we started to see the signs of maturation in 2017 when the CME, Chicago Mercantile Exchange Bitcoin futures started. You know, that contract is a 5 Bitcoin contract. It's big. Right now, it's worth 225 notional value, 225K notional value, I think. Is that right? Yep. And so it's a big contract, and it's not for retailers. I mean, it really was a sign that big players wanted to get into Bitcoin and either do it by putting Bitcoin in a secure wallet and having something to hedge on, or actually just using the futures to make a return on Bitcoin. It really was not for retailers from the beginning. And then we had shortly after that, and maybe a little bit before, but really in 2018, we saw the rise of the OTC, over-the-counter liquidity provider. And these are businesses that provide large amounts of Bitcoin for large players, you know, in a manner that doesn't affect price. You know, over the counter, it's not on exchange. These trades, they're basically negotiated exchanges or negotiated trades. And then we finally saw the establishment of crypto security insurance products. And no retailer is going to sign up for insurance on their crypto. You know, and then talking about security concerns and loss concerns and whatnot. But now we've got literally businesses that are in the place of creating insurance products for large players. And then now we're starting to see established brands get involved. We got Fidelity as a big name. Tastyworks just created crypto for retailers on their service, on their brokerage platform and whatnot. So we're starting to see more established brands get involved. TradeStation. I'm a TradeStation client myself, and they have a crypto account. I don't use it because I'm so used to using the standard exchanges, but it's there if I want to start using it, and I probably will turn it on at some point in time. So interesting how it's really evolved over the last few years, and it's here to stay. I mean, it's really the point. Just to give you kind of a sense of what happens with big players, this is the balance sheet over a period of time of Galaxy Micro, which is one of the large OTC liquidity providers. And so you can see basically the red line is their is their investments. That's crypto that they tend to hold as a treasury asset. And then there's a tradable line. And you can see, and tradable means that they are buying it for clients to make negotiated exchanges with clients. And so you can see it kind of moves up and down around this 100 to 150 million region. I haven't updated this for a couple quarters; it's a little bit outdated. I'll have to catch up on that. It'd be interesting to see where it's gone over the last 10 years, because obviously, last 2 quarters, because it's been a pretty hot market. So it'll be interesting to see what happens in their asset base with that, with the market behaving the way it is. So just to round out institutional support. The largest institutional players in Bitcoin fall into these groups. Hedge funds, cryptocurrency hedge funds are the biggest, and then second, family offices. So large net worth clients pooled money from high net worth families, U.S. and abroad, and in some countries it may even be bigger than the U.S. when I've spoken to advisors of such family offices about crypto. And then now the big move is businesses exposed to crypto via business operations or treasury investments. And Bitcoin via business operations would be like PayPal just started crypto payments. So they made purchases of Bitcoin or cryptos in general just to supply that operation. But then you have this interesting where we get treasury investments by companies to hedge inflation, which is really fascinating. And so MicroStrategy was probably the biggest one. They're basically they're a company that does some cloud enterprise work, and they've been seeing a declining revenue, but they wanted to kind of prop up their stock price, and they had a lot of cash, and they ended up buying a lot of Bitcoin. I think it's like 71,000 Bitcoin, if I recall, worth about over $3 billion, which is pretty amazing. And that's basically in their company treasury. Square has done the same. I think it's something like 2% of their assets, may have increased to 3% over the price rise this year. Square, the payments company that's run by Jack Dorsey, also the CEO of Twitter. So a pretty big company getting involved in crypto. And I'm sure there's more to come. In fact, Michael Saylor, the CEO of MicroStrategy, held a conference recently for companies thinking about this, which is fascinating. So it's basically large companies, but evidence that actually marginal multinational banks are trading crypto is pretty low. We haven't seen a whole lot of signs in that regard. They might be under the table, those guys kind of sneaky, but we haven't seen a whole lot of it. So regulational clarity, again, my point here is that we're stable. I mean, there's sort of, we know where sort of the working bounds are in terms of crypto, and so I'm just going to be a flyby. I mean, basically the SEC has punted to the CFTC on Bitcoin regulation. They basically said Bitcoin is not a security; it is a commodity. Basically, they defined it that way. You can debate that one, but it does regulate some cryptos that it does define as security. So some companies have released cryptos that can be defined by the 1933 Securities Act to be a security, and SEC has maintained regulation over them. Okay, so and this goes for Ethereum as well. CFTC, in fact, the Chicago Mercantile has launched Ethereum futures this week, or was it last week? I think it was last week. And so Ethereum is also in this role as a commodity. And so CFTC is in charge of those commodity cryptos and holds approval over derivative products. So futures, options, and whatnot, as they start to mature in this market, CFTC is the governing body. FinCEN is it's an arm of the Treasury, and it cares about money laundering. So they have various rules and standards around money laundering. In fact, because I'm in the business of trading crypto, I have to watch those too, just make sure I don't get pinned for money laundering. I mean, in money laundering, even if you show the potential of money laundering, they'll come talk to you, even if you haven't done anything illegal. So they're pretty strict. And then finally, basically, if you trade and you are largely holding it as an asset, you don't have to worry about it. But when you start doing large movements of money, say if you were to buy a house with crypto or something like that, you've got to make sure you understand the laws. And then IRS, of course, they want your taxes. And crypto taxes are a little complicated, but as long as you give them to the IRS, there's no concerns. That's a big topic on my service all the time at this time of year. We sort of help each other out. So Bitcoin is very volatile, but with that volatility, you get a high return. So high risk, high return. And you just have to think about it that way. And you've just got to be sort of have the stomach for it, if you will, or the preparation for it, if you're going to be in this market. What's interesting though about that volatility is Bitcoin, which is the orange line on this, in terms of 4-year Sharpe race, is actually superior to every asset. So yes, it has the volatility, but the return for that volatility has been extremely high. Of course, it helps when, this number helps when it's in a bull market like it is today. But even if you look across that chart, the dips, the big dips, especially 2018, the giant 85% drop in return or 85% loss from the top was no match in terms of destroying its Sharpe ratio, which is quite fascinating. And so I don't know, if you're into investing, you kind of look at this chart and you go, well, if I don't have any of the orange line, I better get some, so think about it. But in terms of volatility, 1-year volatility on this chart, the only thing that outstripped it for a very brief period of time was the green line, which is oil. And we all know what happened to oil last year. It went to zero for a while, or at least the front futures contract did. But other than that, Bitcoin takes the cake in terms of volatility. Lastly, just to talk about correlation to the SPX, because this is kind of a revolving myth that if you look across a chart, you sort of can spec out this sort of high correlation to SPX. And there is some of that. And on the March, I think it was March 12th, 2020, there was a liquidity event across many assets, certainly after the pandemic started to take shape. It's sort of, during times of those liquidity crisis, sort of everything goes to correlation of 1. Everything just starts to go together. But that's not the case day to day. So in terms of expecting Bitcoin to always move with the SPX, it really changes. It sort of goes up and down. So of course the zero line is even volatility, and then negative 50% is basically inverse correlation. So it really fluctuates over time. And that's important. That's an important just an understanding. Here's just a quick picture of volatility. And again, this is mainly sort of to gird you with a plan. You've got to really be in for this volatility over time. Now, what's interesting about this price snippet I'm giving you is I'm going to point to, so this was the bear market, and then this is actually the setup for what we have now, which is the breakout. So in some regards, this behaved like a bear market and feels like it. But now we just had smooth gain. In fact, this is this is 11,000 and we're up at 50,000 now. So I haven't fixed this chart or updated it, but you got to be in for this. So even, I'll show my charts later, and I do portend another 85% decline coming. And we'll talk about what price and what I'm looking for, but 85% loss, 342% gain, over this was roughly a little bit more than 6 months. And then 72% loss over 9 months, and then now 176 to 11,000. Well, we've already quadrupled that. So incredible volatility that you've just got to be in for. And this will be the life of this asset. We're looking at one snippet of price. There were many 60% plus corrections in its lifetime over the decade before we got to where we are now. It's been Bitcoin's been trading since 2009. And so that's 12 years going. And so it's a norm. All right. So it's coming again after this run. And that needs to be treated as an opportunity, not as a consternation or fear. Just quick on my forecast. This price is fairly updated. There's a little poke through 50,000 going on now, which isn't captured here, but by and large, this is the way I see it. So right now we've got a rally that should be hitting 60,000. It may stretch 65, but I expect 60,000 or slightly under for now. Major support for this bull market that we have currently is 20,300. And then the end of this bull run, I expect to be at $150,000. So even though we're hitting $50,000, as long as we hold over this pivot of 20,300, this market should make its way to 150. That 20,300 pivot will move up. This is all according to the Elliott Wave theory. It will move up as we break to 60,000, and then and we'll go from there. And so a sort of an evolving trailing support as the market seeks out 150. Now that 150 we can extend, it can go farther, we can fall short, but that's a matter of watching sort of tiny levels of support and resistance as we go. So I'm giving you kind of the macro forest, and then I've got to watch the trees because that's my day job. And at any rate, after 150K, I see a large bear market coming. And in fact, this looks shorter than if I zoom out on a chart to the 2018 bear. But from an Elliott Wave perspective, it's a higher degree bear market. So it should be longer, and it could even last a couple years. And I've got 4 to 5K. I've been looking at it from different vantage points, as I can see it even holding 10K. In fact, literal support is $300. I don't see it getting that low. And the Elliott Wave theory, we know that there's a tendency for the wave 4s to drop just on top of the previous wave 4, which was 3,000 in December 2018. So I'm giving you the range, and then as we get into that bear market, we'll start to give more minute projections or precise projections. And in fact, as I shared in the beginning of this presentation, I was looking for 3,000 in the 2018 bear. After we broke up a certain level, I can't remember which level it was, I said, well, 3,000 is the final end of the line, and we held at 3,100. So these numbers really work, but we need a lot more price action to explain where we're going precisely. So these are kind of the broad brushstrokes. And then finally, after this is where this is going to be the real next opportunity, because once we bottom in this, we call it primary fourth, primary fifth can actually reach 500,000. I mean, it's really, really hard to believe. You can add that up and go, that doesn't even make sense from a market cap standpoint, unless you look at something like the market cap of gold. It starts to make some sense. Doesn't make sense if you think of it as a stock. So it's mind-boggling in terms of that level. But I want to say one thing that's going to happen here is that we're starting to see Bitcoin supply thin out. I can see it on the exchange books that these institutions that have been kind of sucking it up, putting it in their wallets, has really changed the market quite a bit. And so we're getting tight on supply. Just real quickly, Bitcoin in a crisis, there's just some characteristics of Bitcoin that make it work in a crisis. I mean, it allows you to transact with no middleman, which, is great if banks, that's the whole intent of Bitcoin, actually. That's what the white paper, Satoshi white paper, was all about. As long as the internet's up, you can transact. It's also safe from central bank inflation rate. It has an inflation rate. It's locked in the code, doesn't change. And then when it gets to 21 million Bitcoin, it cuts off. There's no more Bitcoin to ever be created again. And I forget what year that's going to happen, but it's a ways off. It's far less cumbersome than physical gold. I mean, that classically physical gold and silver. Physical metals has classically been that hedge for financial crisis, and it's that money when all the other money goes defunct. But Bitcoin really functions better, to be honest. I mean, as long as the internet's up, it's easy to transact. And then in recent years, we've seen citizens of Zimbabwe, Venezuela, Hong Kong, all found use in Bitcoin to secure and move wealth. So if you go back to news about those events, those financial crises over the last few years, you'll see talk of that Bitcoin moving assets off shores. Argentina as well, with their current financial crisis. If you try to do business in Argentina, the chances that you get asked for Bitcoin instead of US dollars is quite high. I've talked to a bunch of business folks doing business in Argentina and talk about that same fact. Even pay stuff. What do you call it? Incomes, or even for work, is even being put out at Bitcoin because the money is going to worthless. Just some ways to engage. So if you want to use a retail exchange, if you're just trying to get your feet wet in the market, Kraken.com, US Binance, Coinbase, these are all exchanges you can use. And you can, by the way, you can ask for this presentation in the virtual room, and you'll get a copy. It'll take about a day or so, but you'll get a copy of it. So just specify your email and that you like the presentation. And then last, blockfly.com, I just added this to this presentation, and I started interacting with them. They actually give you 6%, I think 6.3% interest on your Bitcoin if you hold it there, which is cool. That's pretty nice. I mean, you can't get that in a savings account. Of course, that's not going to outdo the volatility, but if you want to build Bitcoin holding over time, that's not a bad way to do it. And then Bitcoin.com is the old way that everyone used to buy Bitcoin. You can form a wallet there if you want to build a wallet and have it privately, which is a wise thing to learn how to do, at least, whether you do it or not. It's the most secure way to do it. CME futures, if you have a brokerage account, you can also now do that with Ethereum. I know Interactive Brokers has access to it. TradeStation has access to it. So these are ways you can trade Bitcoin. Very heavy contracts, of course, 5 Bitcoin. So you got to be in for that. And the collateral requirement, I believe, is 37%, if I'm not mistaken. Last I checked. And if you're a big player, again, I don't know how big you guys want to go, but calling a OTC liquidity provider may make sense for some of you. Particularly if you're going to start trading over $1 million, I would think about it. So Galaxy Digital, Cumberland Mining is another one. And then finally, the Grayscale Investments OTC symbol, GBTC, the Bitcoin Trust. So many are familiar with it now, but it's an OTC stock that holds Bitcoin, tends to trade at a premium. Today, the premium is 8%. We've seen it go negative very briefly a couple times, but it tends to float up to 30% over right now we're just coming off a bottom, so we may see it float up to 30%. Although there is word that an ETF, a real ETF, not a trust, is going to hit the market before too long. That rumor is floating around, and that's kind of keeping the premium in this one down. But this has been the way, if you want to fund, this has been the way that brokerage customers have been trading Bitcoin, so to speak, up into recent times. So, and I cover this one on my service day in, day out. So in fact, I even have some algo signals that I use on the service to get some good timely buys on this one. Just a quick thing on hedging. So I explained the futures. There's also the BOCT futures, which is 1 Bitcoin, a little bit smaller, not that liquid. And then LedgerX is a small exchange, ledgerx.com, fully regulated by the CFTC, and they give you contracts of 0.01. Those are fully collateralized. Actually, I need to correct this presentation because the BOCT has basically a 40% collateralization as well. And then we have options on all 3 of these exchanges, though BOCT really has no liquidity, and LedgerX has very small liquidity, and it's a little bit painful. So generally, if you're going to do options, you want to do CME. So Chicago Mercantile. And then if you want to explore, I gave you a few links. How to send and receive is a good skill to have. Bitcoin Trading for Beginners is a webinar I did a long time ago, but it's still very valid. I did a PDF on keeping secure. I would say it's very much a primer because there's lots more material on being secure on the web, YouTube videos and whatnot. Satoshi Nakamoto white paper. There was a lawsuit around that copyright for that white paper. So hopefully it's still there. Hopefully this link works. Forgive me if it doesn't. But it's a good thing to read. It's actually, you don't have to be very technical. And then finally, Grayscale Investments Reports. That's the company that created the Bitcoin Trust, GBTC. And their reports are really informative on institutional buying and trends. And if you're really into fundamental analysis, that's a must in the Bitcoin space. And again, you know where to find me. Just you can try my service out for 15 days free. Find me on Twitter. I also have a YouTube. I've been doing YouTube videos as well. They're not high production, but I've been putting one out. In fact, I put one out this morning that I haven't even telecasted on Twitter or anything. How to use the Elliott Wave theory, how to use my analysis basically, and I've done that for subscribers, but it can be helpful if you're interested. And that's it. That's all I've got. I'll take some questions now.
Hey, thank you. Great presentation. First question, is buying Bitcoin on hold for now as it has reached 50K? Will it pull back before resuming to 150K?
I always, people that are new at it, I always push like a scaling approach, because one of the benefits of Bitcoin is that you can buy in these really small increments. If you don't have any Bitcoin, buy a little, just, buy at a level where you can take a dip. That's my take. After 60K, I do expect a dip back to 30K to 40K, something like that. I'll have to see exactly where we top to measure it out, but it should be in that region. And then that would be a buying opportunity. And then I don't know where it's going to be exactly now, but that what I call the bull bear pivot, which I have at 20,300, that'll be updated. I have no idea where it's going to be updated to, because it's going to be based on the top. So that'll just be the sort of watch out level once we start getting back in. For me, I'm just trimming. Like, I'm starting to trim now into 60K, but I have large amount of holdings now. So I'm trimming into 60K, cutting some off. In fact, I have some leverage trades. I'm taking those off, but I'll still leave some Bitcoin on that will take a dip with me down to 30 or 40. It's Bitcoin that's been with me a while. So that's that kind of scale in, scale out approach is an approach I push. And then with Bitcoin, since all the commissions are percentile, it doesn't matter. You're not paying any more fees to do it that way. So that's my advice as a general principle. Hopefully that makes sense.
Excellent. Any thoughts on the security token market, i.e. asset-backed tokens instead of utility tokens?
I actually, that's the area I should get into. I haven't gotten into it. I just haven't been that interested, to be honest, because for securities, I trade stocks. For coins, I trade the commodity. I trade Bitcoin and the Ether. I just haven't gotten into it because I just think it's too new. I'd want to see it get more established personally, but that's just me. So I can't answer it, to be honest.
Do you think we'll see Fidelity, TD Ameritrade, etc. offer brokerage services for cryptos directly versus ETFs and trusts?
Well, I mean, like, again, Tastyworks, which I think is a great broker and great tools, TradeStation is. I know I have been into a conference where I was a speaker, and the Think or Swim crypto head was talking, and I got the sense, but she wasn't outing it like we're going to, but this was over a year ago, and they still haven't. But I had this feeling at that conference that they would. Fidelity, I'm not sure what they're up to. They are really, in terms of crypto, they seem to be really focused on institutional money, to be honest. So if you are large enough, you can call them up. But if you want to trade day to day, they're not involved, and I'm not sure they will.
Thanks. Do you mind expanding on Ethereum and whether or not you think it's a good buy?
Yeah, I trade it. I trade it alongside Bitcoin. Bitcoin is what I call my core holding, and then Ether, I take short-term trades on it. In fact, I have a setup where I view Ethereum is going to outperform Bitcoin over a period of a few months. We'll see if the setup comes to play. Right now, but Ethereum is going down versus Bitcoin, but I expect it to reverse. The issue I have with it, this is fundamentals, not necessarily chart based, but when Bitcoin goes up, gas prices increase, and we can see Ethereum gas prices get so astronomical that it's hard to transact in it. And so that puts a limit on Ethereum. Again, gas prices are basically the transaction fees involved on the Ethereum network. And they're basically tied to the price of Ethereum. So if Ethereum doubles from here, then the gas prices will double. So that's a problem I see with Ethereum that keeps a constraint on its pricing. I know that they're doing all sorts of work on the network, and it's called Ethereum 2.0, and they've got a couple other updates. That may change, but it's still the case right now. Do I think it's great to buy right now and have some and trade it? It's great, but I think you have to know your chart is really the bottom line. Know when to get out.
Thanks. Can you mention who gives the 6% return for holding your Bitcoin again?
BlockFi, BLOCKFI. And again, you can get the presentation and the links there. BlockFi. And also what's interesting is they're releasing a credit card where if you go out and spend, they'll give you a 1.5% back as Bitcoin in your account. It's kind of cool. You got a wait list. They haven't started them yet, but it's coming out.
Are you worried about another coin taking over from Bitcoin? And also, why didn't Bitcoin Cash Group get more love?
I think there's a few things. So yeah, I'm always watching for that. Like I need to, it needs to be real signed. Again, Bitcoin is not superior technology compared to a lot of coins out there, but what Bitcoin really is decentralized governance. So like if you look at Ethereum, it's pretty much run by a small group. And so institutions, and the Bitcoin Cash is the same way, to be honest. There's a very small group of developers. If you're an institutional money, you really want like governance stability. You don't want to see this coin, you don't want to see Bitcoin, that right now has a very low inflation rate, and all of a sudden you have a small group of people controlling the coin, and then they decide to pop the inflation rate, for instance. That devalues the currency, right? So there's a lot of security in having a completely decentralized governance, and Bitcoin is the most decentralized of all the coins. So when you look at coins, there's kind of you can kind of call it a spectrum of sort of decentralized to partially centralized to ultra centralized to completely centralized, and Bitcoin is really purely decentralized, and that's a great value. I don't know if that may be French or Greek to some people, but you can imagine it. Basically, decentralized governance means not one player or a group of players could change the game. That's really important. Hope that makes sense.
Thank you. Are there any risks of the government's cracking down on Bitcoin to keep a monopoly on the currency?
I think that that's always a risk, but I don't think they can do it because they have to shut off the internet. I mean, they can make it illegal and they can make it difficult. I do expect them to go after privacy coins, which are coins that don't telegraph the address. The reality about Bitcoin, though, is that it's not private. So if the government has the means to figure out who owns the Bitcoin that is getting transacted. So given that it's not private, I'm not sure they are really worried about it. As long as they can get their taxes, as long as they can clamp down on money laundering. Like that, there's that myth that Bitcoin is great for doing crime. It's really not. It's not private enough. But there are privacy coins that basically scramble their addresses and things. And I can see the government trying to make those illegal or do something like that. Just another thing about the government. I mean, as you look at the regulation and you look how our exchanges are now tied into it, and our bankers are into it, hedge funds are into it, there's a little bit too much of a train going down the tracks for them all of a sudden to make Bitcoin illegal. You know what I mean? It doesn't make a lot of sense. I also don't think Bitcoin is a currency. You can't go to the store and let's say you're holding money for paying your bills, and right now it's going up, so it's great, but in 6 months it's going to be going down crazy in my point of view, or maybe a year from now. How do you pay your bills in something that's dropping by 20% a day, which is what Bitcoin does when it's really volatile? It's not really practical. You know what I mean? So I don't think the government even looks at it as a currency. If they're smart, they're not looking at it as a currency, but rather an asset.
Thanks. And do you mind reviewing where we are in the Bitcoin wave structure? Are we still in wave B?
We're actually the orange B I've taken off for my subscribers. I just haven't updated this chart. That's gone. So we're in wave 3. So this wave 3 here is the fifth wave of the third wave, primary third wave, and this is primary fourth, primary fifth. So there's even bigger bear market expected after that. So that's the sort of forest. The last, and this may be like 5 years off before we're up at this fifth wave. And then in terms of this fifth wave, which is this right here, we're in the middle of the 3. So this is the third of this fifth. Hopefully that makes sense. There's actually a 5 missing on here too, though. I just realized when I look at it, but hopefully that helps. So the next 60,000 is this right here. I have an alternate where there's actually a higher 3 as well, closer to 85,000, but this is where 60K is, and then we should get a big pullback, and then this should run up to 150.
Thank you. What about DeFi platforms?
I've played with them and I have some trades on them. There's a couple things, like they're on the Ethereum network and the gas prices are ridiculous. So talk about trade commissions built into the system, and they don't pay anybody but the Ethereum transactor, the miners. That's horrible. So transactions are slow too. And but there's some interesting projects, and there's projects where you can get some nice yields. There's a guy on a subscriber. He hasn't written enough for me to know how to do it, but he built himself. He says he has a portfolio with a 15 to 100% yield, meaning dividends from the system. I know how to get dividends off of various coins, but I haven't seen anything compelling enough to build myself a portfolio. In fact, my return is well over 100% a year when we're in a bull market like this, so it's kind of irrelevant. But bottom line to me, slow trading and expensive. But there's some very interesting projects that are giving yield, or and some of them are moving too and getting a good principal return as well. So just have to be careful what you buy. That's all. Read up on the projects and whatnot. I don't have necessarily time for all of that.
Thanks. Do you recommend wallets for higher investments and use similar balances to trade inside the exchanges?
Yeah, if you are going to be a big Bitcoin holder, I would do a couple things. I would get high security, so I would maybe even separate your computer that touches crypto. I would get a cold wallet, which means it's not residing on any wallet on a computer. It's a piece of paper, it's an address and a key, and for a lot of your holdings. And then I would spread them around. There's nothing wrong with the exchanges in America have never been hacked, although users have been compromised. So when you hear about somebody getting hacked on exchanges because they let their own security guard down. So bottom line, get your security strong. If you have really large holdings, get it into a cold wallet, and then cut your trading holdings to a small portion, and you should be fine. And then again, the link, I talk about a little bit of that in the link on one of the pages in this presentation.
Thanks. And we have time for one last question here. And forgive me for mispronouncing it, but what is your analysis on Dogecoin?
Dogecoin. I believe it has topped temporarily. Last I looked at it, I haven't looked at it in a couple of days. So that was that whole thing was now Doge is interesting because it goes through cyclical. It's basically, if you look at it over a long period of time, it's basically up and down. There's no trend. Like it's just oscillating. So this is the latest upward oscillation, and it's gonna sink if it follows that behavior that it has for a couple of years, and then when it sinks, it'll be time to sort of accumulate it again. But it's way down. I forget where the price is where you accumulate it. It's way down from here, and I think that this run is topped, and it's been topped because we just had a sentiment. We had a hot sentiment, and when everyone's hot on something, you want to pare back, and so. But I have to look at the price again and see if I am as completely certain that it has topped. But it looked that way the last time I looked at it.
All right. Well, thank you again for joining us. That was fantastic information. We appreciate your time.
Yeah. Thank you, guys.
And as a friendly reminder to everyone, if you missed a session at this week's or any of this week's sessions,